Hey guys, it's Ted. It is Monday, February 3rd, first Monday of February. Super excited. Third show of the day, but you know, you got to save the best for last. My other two shows, you know I love you. I'm here with my friends, my teammates, my comrades, Vanessa, Veronica Flores, and Len Padilla. Oh my God, I got Vanessa on the brain. Veronica Flores and Len Padilla. We're all with the home team of Freedom Mortgage. We're going to talk about the 8 P's today, but we're going to get to know them a little bit, and they have an event coming up that we're putting together, and I think it's going to be really, really educational, especially for you self-employed people. If you ever want to get into loans, you ever want to get into a house and you're afraid, these guys are going to take that fear away. And so I'm super excited to have not Vanessa or Veronica, but Veronica Flores and Len Padilla on the show. Welcome.
Thank you so much.
All right, so you know, we love origin story here. We love to learn a little bit about you before we go diving deep into the topic. So tell them a little bit about you, Veronica.
Well, my name is Veronica, obviously, not Vanessa.
Or Veneca.
Or Veneca.
I don't know
That's
where
interesting.
that was a good one.
That might be my alter ego name for now.
Hashtag Veneca.
Hashtag Veneca.
I love it. I am originally from Puerto Rico. I was basically raised in Orlando, which is obviously where I live and where I work and where I'm raising my children. I'm a single mom. I have 3 beautiful little girls that I'm hoping to raise as little mini business women. That's what I have in the works.
Love that.
I chose the mortgage industry as my forte and my specialty when it comes to my career for multiple reasons. One, for the flexibility, so I can still balance being a mom and being able to make my own schedule and still provide good value to our community and get people into homes. Because at the end of the day, that was always my aspiration when I was younger, and I went through the whole thing from beginning to end. It was not the best story because I was actually one of the many victims of the housing crisis. I actually bought right at the peak before that bubble bursted.
Wow.
I had no education whatsoever. I just kind of went with what everybody was telling me, and it was just no money down and get into this house, and next thing you know, got laid off, lost my house, lost everything. And then after that, I think I made a decision to become more of an educator and to teach people more about financial stability and how important it is to ask those important questions and not be afraid to sound or feel like you're dumb because you're asking. I think it's important that the more questions that you ask, the more you educate yourself, and you can make better decisions for your life. So that's kind of why I'm doing what I'm doing.
Love that. That's a nice wrap up on the origin story. Very good.
Hashtag Veneca.
Hashtag Veneca. I'm never going to live that down.
Nope.
That's it.
All right, Len Padilla, tell us a little bit about you.
I'm originally from New York, but I've been in Kissimmee, Orlando area since like '99. So this is pretty much where I grew up. Grew up in low-income housing. Grew up with 2 parents that tried their best, but just financially they just could never get ahead of them of the situation. So I self-educated myself at 16, learned credit, 18, learned taxes, and decided to teach myself and learn from those people that are successful. The more I can educate myself, the less mistakes I can make in life, the further I can get ahead. And then after I got a little bit older, I had a passion now for helping other people just apply what I actually learned and teach my friends, my family, my coworkers, my colleagues, my clients, everyone, the steps to becoming successful. And one of those key steps is home ownership. So that's kind of why I am in this industry, in the real estate loan mortgage industry, is to, if I help enough people achieve their goals, eventually I'll achieve mine.
I love that too. See, you shared. You guys both opened up.
Drop
I like
the
it.
mic.
Drop the mic. Okay, we're done here. I think a lot of people are afraid of the word home ownership. I think we've talked about this before. There's an affordable housing crisis that we have, and certainly Orlando is part of that. And I think people just don't know the steps. They don't understand that what they're paying in rent, they could be paying toward a mortgage payment. They think because of misinformation out there that they don't have the right credit score, the right credit anything. They don't have the right money down. You need to have 20% down. They don't have all the information, and what information they do have is inaccurate. Right. So talk about that a little bit, and we're going to get to self-employed in a minute, but talk a little bit about how the misinformation that's out there. I think there's a lot of stuff that people believe that is completely a myth.
I do want to start with one thing, is that everyone can purchase. It's just a matter of when. A lot of people feel that based off hearsay, that from what you heard from other people, that this is the way things work. This is not the way things work. There's multiple programs, and there's so many different directions you can go when it comes to credit, income, taxes, the programs you qualify for. Everyone can be a home owner. It's just a matter of when. So I think that that's our passion, is that you don't we see people all the time, they're not ready today, but you give them 3 to 6 months with an awesome game plan. They're homeowners, and that solves the housing crisis, because you freeze your payment. Moving forward, that payment, taxes might go up slightly here and there, but your rent is going to continue to rise, but your mortgage payment is going to be nice and steady, and at the end you have something to show for it.
I love that.
I agree.
All right, so myths. What do you think? Do you need to have an 800 credit score?
Oh my goodness, no. Actually, with Freedom now, although we don't like to promote it as much because we like to educate our buyers and teach them how to be more financially responsible and understand how important credit is, not just in the aspect of homeownership, but also in their life and what they choose to do later on. If they want to buy a car, student loans, maybe they want to go back to school, they want to buy furniture. Credit is such a key factor in so many things that we do as consumers nowadays. So even though we can do it with a 500 credit score, that doesn't mean that we necessarily want to put you in a position like that. But 580s minimum on an FHA, so it's totally doable. We like to take our consumers and we like to teach them and show them little tips and tricks about how to be in a better position so that they can get better rates, lower down payments, and really be able to take advantage of the loan programs that set them up for their 30 years that they have on their mortgage. We even teach you how to pay it off and much less. So
do I have to have 20% down?
Never. No, you can actually do it with 0% down on some programs. Conventional is extremely competitive now, where you only need 3% down if you're a first-time home buyer, or even if you aren't, you can still do 3% down with some eligibility requirements. But it's definitely, as long as you're purchasing a principal residence, the down payment is super low.
I love it. What do you think the market's like? I'm fascinated by this because I get different answers. Is the market a growing, still healthy market? I mean, the rates are still low and just went down. Or recently they've just been amazing, right? So what's going on in the market? Are we seeing a ton of more people coming out and buying or refinancing? What are you guys seeing in the market?
We're seeing a lot of opportunity. I think it's what we're seeing now. A lot of people that rates impact payments impact qualifications. Qualification impacts what you can actually qualify for and purchase. So with lower rates, the opportunities are there where maybe a few months ago that house was unattainable. Now it's actually attainable. People that have equity, that have been in their houses for 2, 3, 4, 5+ years, this is the best time, I would say, right now. The rates are super low. Cash out, pay off those credit cards, pay off those student loans, pay off the cars, wrap it all into a lower interest mortgage, and at the same time you're going to be saving on your monthly. You're definitely you're allocating your funds in the correct places, is basically the best way I can put it. Borrow money at a very low interest, pay off your higher interest accounts. You're saving money. Financial freedom.
I love that.
You
All right.
can also invest in more properties.
Oh yes,
you could
residual income
residual income.
Yeah, cash flow.
Cash flow is important. So
people are
everybody
so
wants to
afraid
invest.
of one home, and then they think of an investment home, and they get even more afraid. And what they're both saying, I almost called you that again, Veronica and Len.
It's all right. Let's
Maybe it's
just
a combination of Veronica and Len. What Veronica is saying is that there's so much opportunity out there. There's so much that you can do, and you think you can't, and then you're establishing this amazing stream of income that you might not have thought you could do. I mean,
Agreed.
Owning one property is a big deal. Imagine owning two. Well, it sounds like it's a Herculean task, but I can tell you that if you've got the right loan and you're not house poor, that there are a lot of ways that you can do it. It's going to make sense. All right, let's talk about self-employed, because I think a lot of people in this day and age especially, there's more and more self-employed people.
Yes.
People are creating their own income, they're creating their own companies, they're doing things on their own, and so we are seeing more and more people who are just that, self-employed. You're not getting a W-2, you're not getting your taxes taken out and then getting your refund at the end of the year, the following year. You have all of these expenses that you have, and it can be a daunting task to deal with that, but then it can also be, in most people's minds, a really big giant task to try to prove your income so that you can qualify for a home. So let's talk about the 8 Ps and a little bit about self-employed.
So we are hosting a seminar this weekend on Saturday over in the Lake Nona area. And this particular seminar is specifically tailored for self-employed buyers. So obviously, we've noticed an increase in the type of buyers that are purchasing nowadays, and a lot of them have that self-employed income, or it could be secondary. You know, we got a lot of Uber drivers now. We got a lot of side hustles, people doing construction or remodeling on the side. But the thing is that people want to buy, but they don't know what they have to do to be able to buy. And most self-employed buyers are obviously going to try to net or declare as little as possible because they really don't want to get hit on the tax liabilities. So, but they don't put the two together. They don't realize that they're shooting their foot off because they're saving a couple hundred or a couple $1,000s, you know, on their tax liability, but now they've just completely eliminated their ability to be able to purchase. So the seminar is meant for that. It's to teach people those 8 keys to be able to get pre-approved as a self-employed buyer. And we get a little bit more in depth. We help people kind of understand why they're asking for this, or how you can do things so that it's not a huge tax liability. You can still pay a little bit less on tax. We just help you figure out how to structure and how to spread your monies out so that you're still following the guidelines with the IRS and you don't get caught up in that.
Right.
But you also have the full capacity to be able to purchase the home of your dreams, because that's also something that I've noticed is self-employed buyers, again, when they're claiming lower income, they lose their purchase power and they actually don't have any opportunity, because obviously our market is growing and it's nice and steady, but Central Florida is the place to be. So we definitely want to be able to teach our self-employed buyers the importance of claiming sufficient income so that they can reach that goal and being able to do it in the most efficient and productive way possible, really.
It's true, because I think as somebody who was a business owner, one of the challenges was my CPA would say, well, give me all of your receipts and I'll make sure that you can write off whatever you're supposed to legitimately be able to write off. And that was a good thing. If I didn't have enough receipts, my fear was that I wouldn't be in a good place with the IRS. But you're right, it takes away, so the perception is it takes away your buying power, because if your tax returns look like you made no money, it's very hard to prove your income.
Correct.
In that scenario. And I think there is such a catch-22, and people don't.
Yes.
You've got the CPAs on one hand.
They're trying to
they want to be
amazing.
heroes,
Most
and you're
amount of
not,
money in your pocket.
Yes.
you're not paying all that money, but
And they
then
They're taking away your future by
that's
doing
correct. And you're so when you share those tax returns with your loan officer or your realtor, hopefully your loan officer, loan officer first, please. Then what happens is they look at it and think, well, you can't even show any income, or you're in the negative.
They can show income. Someone can report $100,000.
Yes.
It's what you report after all the deductions. So we have, for example, I would say, Uber's a very, it's very popular now.
Right.
People are making $30,000-$40,000, but they write off all of the expenses, the vehicle, the gas, the mileage. Now mileage is okay, we can talk about that, but once you start writing off all your income, it's whatever's left over that we use to qualify. So especially right now that it's tax season, this is the perfect time to speak to a loan officer and say, look, this is what I filed last year.
Right.
This is what I intend to file this year. What do you think I would qualify for? Because right now is the moment where we can go ahead and say, listen, this is how this is going to affect you. This is what we recommend. Mind you, we're not CPAs. We're not giving you tax advice. This is just recommendations based off how the loan is going to be structured. So sitting down with someone like Veronica, myself, would be very, very beneficial for pretty much anyone interested to buy in a home in the next even year and a half, 2 years.
Notice he didn't say sit down with Ted. There's a whole other story behind
Well, you take 1008s or 1007s.
I don't know. 1007s. It's very confusing.
I did catch myself on that one, too.
No, it was good. It was good. No, it was perfect lead-in for me. I think it's really important because as a self-employed business owner, it was very difficult for me to figure out how to maneuver through it. What helped me back in the day was 2006. As a self-employed buyer, it didn't matter back then.
Well,
I had a
stated
pulse.
income.
Stated income ruled the world
Yes.
back then. And so I could just state the income. But now you have to be able to show this pattern. I mean, you have to be able to show that you have the income in there. And what happens is if you write everything off, what does that look like? Well, that means you have no money left over to do anything. So you have to be really careful, and you have to work with professionals like Len and Veronica, because it's really important for you to make the right decision. and your CPA has one thing, you have other dreams that you want to have, and you want to
Yes.
make sure everybody's kind of melded together.
Correct.
That's nothing against my CPA friends, but they have a job to do, and you
Yes.
pay them to do it. You just sometimes you want to make sure that they are aware of what your ultimate goals
Yes.
are, and in order for you to do that, you should have mortgage professionals. You've got your tax professional, your CPA, and then you want to make sure that you have both of those people are kind of married together on what it is you want to accomplish. Because we work with a lot of CPAs.
Yes. We're
we
actually going to have one at the seminar.
See, okay, so I
To
led
help.
right into that because I planned that. All right, tell us a little bit about the actual seminar. 8 keys to talk about the keys.
Right. Well, the keys are a little bit of a secret, but I will give
Okay.
you a couple.
Give us
So
a couple keys.
guidelines have loosened up tremendously for self-employed buyers. So we're going to go over a couple of the guidelines and a couple little ways of how things are a little bit easier for you guys. So it used to be where you needed at least 2 years of taxes to be able to qualify. Now with certain factors, so you can actually do it with just one. Right? So we have 2019 ready to go for us. It's tax season right
Love
now. So now is the time for us to kind of go line by line and figure out where you want to live, how much you're looking to spend on a monthly basis, because we consider personal budgets more than we consider our paper budgets or our debt to income ratio budgets. I think it's important for buyers to be able to speak upon what they're truly capable of buying because they have their own personal expenses.
Agreed.
So that's one of the keys. We go on personal budgets and we help you figure out exactly what you can truly afford and not be house broke, because people still want to go on vacations. They still want to take their kids out to eat. We're also going to be discussing credit and how it affects and how much of a huge factor it is also on the pre-approval side. Different alternatives of how self-employed buyers can make things easier for their pocket and still be able to maximize on all the opportunities that we have to offer for loan programs. Let me see what else. There's so many things.
What would you classify as a self-employed buyer? Barbers,
Self-employed
landscapers,
buyers, yes.
business owners. I mean, it's so many people that fit within that category that, you know, they don't see it as self-employed, but you know, filing your taxes is very important.
Yes.
So, you know, if you're in a cash business, if you're in a service business where you're collecting tips or you're collecting, you know, cash for your services or
Right.
even sales, you know, 1099 commission jobs, all of those fall under self-employed. So it's very important to understand what you need to do in order to qualify in the future, because this also affects credit cards, if you're trying to purchase a vehicle, if you're trying to purchase if you're trying to get a business loan. All of this is all wrapped into the same knowledge, but except we're going to apply it to mortgages. So it's very beneficial. We hope that you guys would come out on Saturday.
Yes.
You know, gather as much information as you possibly can. This is an ongoing thing. We don't just educate on self-employment. We educate on everything.
Everything.
You know, I'm very big on credit. I love educating people on credit, finances, savings, retirement, you know, building wealth, because we didn't come from a generation that knew how to do it, but we do have the tools to learn how to do it.
I agree.
With the internet being, you know, so available, the information being online, you know, Credit Karma popped up, and all of a sudden people started becoming much educated
Yes.
on their credit
But
scores.
it's amazing.
So, you know, by understanding how this applies to your future, I think would be a huge benefit.
Why did you guys decide to do this particular seminar or this particular workshop? Is it because, I think Veronica mentioned it a little bit earlier, you were seeing so many self-employed come in and their
Yes.
stuff was just
Correct.
so off,
Well,
right?
it's perfect. It's like, so I hate disappointing people. I hate saying no to people and giving them the bad news. I like to make things happen, and I like to keep people motivated and excited about the home purchase process. But you get people that come in, a lot of them are self-employed, and they swear that they make great money. Here are my bank statements. I mean, look at all this money flowing in and
Right.
out. I mean, it's great. Meanwhile, they have a negative net income on their taxes, but yet they don't even know what's what. They don't know what gross receipts are. They don't know what expenses were claims, because they rely and trust on their CPA to give them the best kind of tax refund, right?
Correct.
Or minimal tax liability. So one of the main reasons why we have to do seminars like this, it's one, obviously to help people claim the right amount of money to be able to purchase, but also to educate our buyers and teach them that it's okay, empower them to want to know and ask the questions about what tax filings are and what are the things that you need to understand, so that when they're filing their taxes, they can, and they see something questionable, that they can bring it up to their CPA. We're going to have the CPAs at the seminar as well for all those that have, you know, a little bit more detailed questions. But the guys that are coming are going to get really deep as to why, you know, business miles are a key factor to being able to get in pre-approved, but still keep net low. So things like that. So at the end of the day, our main focus is basically to teach, to empower, and to educate our self-employed buyers, because we want, I think self-employed, I think business people, I think entrepreneurs are our strength. And the more that we teach them how to be financially responsible and educated, the farther we're going to be able to get in our economy.
I agree, and I think the three of us, work in an industry where our referral partners, our largest referral partners, are almost all self-employed. So we have this giant real estate community. Just to give you an example, realtors are normally 1099 self-employed. Yes. W-9, whatever it is. You're going to correct me later. But you're going to get one of those things if you didn't already. And I think that they don't even know, even though they're in it and they help their clients find the right lender, they still don't know how to write it off and to do the things in a way that is beneficial for them. Because that is a large industry, one of the largest industries of self-employed is the real estate community. And I think we miss out a lot. They miss out a lot. When I owned my insurance agencies, I missed out a lot. Same with the title companies. I didn't know. Thankfully, I had the right people, and it was a different time. But if you're a business owner in this day and age, you really do have to know all of the parameters. It can't just be a blanket, write it all off. You really have to figure out what's best for you and what your ultimate goals and plans are. Because if you're in the house of your dreams and you're never going to leave, and we're going to die, then okay, fine.
But that's so unrealistic.
It's so unrealistic.
What is it, 5 to 7 years that the average American stays in their home?
And so it's different even than it was 5 to 7 years ago. So think about all of the changes. And if you do have a side hustle, let's say you drive for Lyft or for Uber, you've got a whole different amount of income that's coming in and a write-off. And remember, you're one sole person, unless you have that in a corporate name, which is completely different too. You've got all of this stuff going on, and you want to make sure that you're filing it correctly, writing it off correctly, putting everything in the right places, because you may think you know what it is, but when it boils down to getting a home loan, refinancing, doing something different, buying an investment home, you really have to make sure that all of your I's are dotted and your T's crossed. All right, so tell them a little bit more, give them a little bit more about the actual date, time, I know it's a Saturday, time and place.
So we are doing it in the Lake Nona area at G Worlds, which is right around Moss Park Drive. I'll have details. I actually have the event already on my business page, so feel free. Veronica Flores, the mortgage loan originator. You can go in there, you can grab a little bit more details. Be sure to register if you do want to come, because we have limited space. So I'll be putting out the information via Facebook and Instagram, but it starts at 11:30, so be there promptly, please, because you don't want to miss out on all the great information that we're going to be giving out. We actually also have another seminar in the same place on the 22nd of this month, just for first-time home buyers.
Awesome.
Yes, and that's going to be a really good one, because we're going to talk about how you can get some free money from the government.
We like that.
Yes, we do.
That. All right, so we know the date, we know the place, we know the time. So before we head out, I think it's really important for the audience to know that you guys weren't always in the position you're in. So you're doing this seminar, you're doing the workshop, and yet you all have experiences, you have mentors, people that helped you out. Can you give a shout out to someone or some people just to let them know maybe what you guys did to get here and somebody helping you along the way?
I would say coming across books, self-education was very important for me. But I want to say one of the persons that I followed, and it was more of their mentality, was actually Warren Buffett. At 18 years old, one thing that stuck with me was be fearful when people are greedy, be greedy when people are fearful. So during the time when people are telling you like, oh no, don't do it right now, no, it's not, listen, this is when you do the complete opposite. This is the time when you purchase. This is the time when you invest in yourself, your family, because they're coming from a place of knowledge that is limited, and you're coming from a place of knowledge that you're just going to learn more and more and educate yourself. And that's actually what changed my life. Learning from people that I never met, but just following them, just watching them as a mentor, picking up on the details, learn from other people's mistakes, don't make your own.
Love it. How about you, Veronica?
This guy over here, you hear him? They're self-educated. No, but it's true.
It is true.
It's you got to look up to those people that have made it and from nothing. I have actual people, live people that I can touch and feel and talk to on a regular basis. My mom, I'm always gonna give a shout out to my mom. Because she is my #1 supporter.
Love her.
Yes, she's pretty awesome.
She's amazing.
But she was the one that told me to get into this business. She thought that I would be really, really good, and she's also in the real estate industry. So she actually wanted me to partner up with her. But I just couldn't see myself doing that piece.
Right.
I'm really, really great at numbers. I was looking for something that had a little bit more consistency. The mortgage side of the business, I feel, is a little bit more consistent, just because it's got more volume since we service, business people, we service realtors, we service consumers directly. So it just seems like it made more sense for me on a personal level, being that I'm a single mom. I was a newly single mom at that time, and I needed to figure out a way to be able to balance both lives so I can still be a successful mom and take care of my children and raise them properly. And also be an amazing career woman, because at the end of the day, they're watching everything that I do. But when I started in the mortgage industry, I started in a place where I started below. So I was kind of like the do girl, and I did all the grunt work. And if it wasn't for the branch manager that I had at that time, I probably wouldn't have learned even half of the stuff that I did as quickly as I did.
That's another thing I wanted to say. Freedom Mortgage is very good when it comes to, we all learn from each other. And we're a tight group, so if someone has something that they learned, we all learned it at the same time. So big shout out to Freedom Mortgage, Brandon, James, the home team. It's constantly, every single day we're learning. The emails back and forth. If the support, we don't know it all. I personally don't know it all. I know she is very, very good at structuring and very clever. And I've actually learned from her. But the balance of strengths and weaknesses, we leverage very good when it comes to Freedom Mortgage.
I was going to throw that out there too. I think that what you're seeing here, us working together, different roles, but working for the same common good, is such a positive thing that the home team of Freedom Mortgage does. So didn't want to turn this into a recruitment video.
No,
I mean, it's love.
But it was a shout out.
Like,
they deserve
it.
it.
Shout out. I love
Correct.
that you said that. And it's real. You can't fake this kind of stuff. So I appreciate you guys. I love what you're doing. I love the idea behind this workshop seminar, because I would have loved to have it as a self-employed person. It's just so important to kind of know what your options are, and to have people that are going to work together for the better good for you too. So thank you, Veronica Flores. I said it